Hello, this is Mijueun from Baekju City University. The Mijueun special broadcast will begin on May 24th. Today, as always, we have the thoughtful man Kim In-jung with us. Hello, Mr. Representative.
Yes, hello. It's good to see you, Mr. Representative.
Now, the nickname, the man of the weekend, doesn't feel awkward anymore. Now, you have to be the man of the weekend, working on Mondays, Thursdays, Saturdays, and even Sundays, right? I'll think of a good nickname for you. You often visit Mijueun on the channel, right?
Yes, even if I don't mean to, I end up visiting once or twice a month. Thanks to the valuable suggestions from Mijueun television viewers, I expanded the collaborative model. Sharing Tuesday and Thursday videos provided a wealth of practical feedback. Since Minjun-kyun is coming as an individual guest, up until now the videos have been with the representative, but this is the first time Minjun, who is not a representative, is appearing, so I wanted to invite him. I wanted to hear directly from Mijueun, the representative, because even though he appears in many videos, there are still viewers who are curious or have doubts. Honestly, I get really nervous, and since it's a new challenge, I read the comments a lot. If there are any negative ones, I wonder, did I do something wrong? So I was really nervous when I first tried it, but thankfully everyone was so supportive, left nice comments, and encouraged me, so I gained a lot of courage. So now I'm going to take it a bit slower, look for more data, and make investment decisions based on that. I'll try to be more careful and responsible so that I can repay your support.
Yes, that's right. I also read all the comments in real time, one by one. Even though the comments are related to your video, I imagine that they're directed at me and read them all. But honestly, most of them were positive. I don't think there was a single malicious comment. So thanks to that, I felt really good reading all those positive comments. You asked about my wife, right? Are you curious if I didn't get in trouble? So I created a lot of fan communities myself, but honestly, when it comes to community activities, I don't really get jealous. It's more like I just have a lot of thoughts about it. If it's a snowflake that falls quietly in front of you, it's like you can see it and catch it. But if it's a snowflake that falls behind you, it's like you can't see it, but it still lands on you. Recently, I've been hearing a lot that I'm not running the community alone anymore, but that we're running it together as a group. I will try my best to stay connected with you, Daepyonim, even if we don't talk often. I hope our strong relationship continues for a long time. I will do better, Daepyonim. I will do better. Since it's the weekend today, I think a lot of people will be watching this video. By the way, today is the Order of American Elementary Schools. Last week we covered how to manage the risk of the market and our portfolio, and I received a lot of positive feedback in the comments. I've explained each topic one by one, talked about the overall market momentum, and also discussed valuations, so I received a lot of positive feedback. Today I'll give you a comprehensive review and share practical methods you can actually use.
Yes, that's right. Up until now, I've been covering the parts related to risk in order, and now we're going to wrap up the risk section and move on to the next topic. So in the context of supply and demand, I'll explain how we make adjustments, what makes a good fit, and how CNN and FNN are structured differently when we compare them. Then when we move on to the next stage, wouldn't it be good if we could decide our individual portfolio in that way? Even if you have more than 10 individual stocks, it hasn't been easy to judge them personally, whether to hold them or to sell them or to decide on these things. So for those parts, a system that can judge various parts of the portfolio as one stop was upgraded last week. If you go through the process and look at the contents on the extension line, and if you talk about those parts together, many people will be able to manage their portfolios a little more efficiently. But I wondered if that would be enough, so I prepared this corner for you.
That's good. Personally, I think risk management is extremely important. So for those of you watching this broadcast who may have a lot of stock holdings or who are just managing risk on your own, I prepared this segment just for you. In fact, even just focusing on stock investment like this, we often have a lot of worries and concerns, and we live with that kind of mindset. I often say this to my younger members, and also when I do live broadcasts. We have savings, we have investments, we have insurance, and there are many different financial products, but we still feel uneasy. So we try to make even a little more profit by investing in stocks. That's why we have a lot of worries and fears, and we avoid a lot of risks and try to make safe choices. But when it comes to investing, we end up focusing on risk because we want to make a profit. So, personally, I think the word risk is something we pay a lot of attention to when investing. So, if you watch today's broadcast, you'll find out how you can manage your risk. I hope this will be an opportunity for many of you to learn even more. Then Mr. Junbi will explain the details.
I'll get started right away. Today, I'd like to talk about how to diagnose portfolio. When the market is generally overvalued or undervalued, how should you diagnose your portfolio? So, for individuals who already have a certain level of experience, you can probably handle this on your own. But since we're elementary students right now, for elementary students, if you have a mentor or a guide, or if there's a set guideline or checklist, it's much better to check your portfolio against those. So this time, I'm going to introduce the Warren Stone diagnosis menu, which is in the elementary student section, and explain how you can use it to diagnose several people's portfolios at once. I'll explain how to use it step by step so you can actually use it. Before we start, I want to mention something I said when I first entered the market. Back then, I said a few words about the temperament of a template, and the market is still unpredictable, so I continue to be cautious. I base my market valuations on the prevailing sentiment, be it fear, doubt, pessimism, or happiness. Templeton said he achieved his greatest success using this principle. I believe the current market sentiment lies between doubt and optimism.
That's what I think. Compared to before,
Doubt feels like it's slowly fading away. And now, rather than things getting worse, there's a consensus among many people that things are starting to get better. So, it's not the end of the bear market yet, but at least for now, we can say that the market is temporarily stabilizing and showing some improvement. The happiness of the nation. The increasing account balance and open stock market make me feel good. However, when everyone feels this way, the real bull market may be ending. Considering this perspective, now might be the right time to reassess. Whenever I have time, I try to look at the screen like this. Rather than focusing on technical indicators, I want to see if I am feeling a certain way. I think that's the most important part of seeing the end of the market. So rather than just looking at simple numbers like some rational people do, if you also judge based on these emotional parts, you'll be able to see the market more completely and make better decisions about the overall market. Yes, last time I scored the market and kept a record of the S&P index and other indices, and I shared my thoughts on how the indices went up and down according to the scores. Today, I've updated this data and brought it to you. So if you just look at the right side, you'll see that I've colored the areas like this. If you look at the shaded area, when the score drops below 75, I've only organized the sections that entered the exploration zone.
so right now,
The data covers 3 years, so if you look here, you can see that it's coming in like this. So if you look at the most recent data here, you can see how far it has spread, and you can get a sense of the current situation in this area. So at times like this, we need to think about what we should do, and I want to go over these parts again and explain how to check your portfolio in this situation. Now, I got a lot of questions through our service channel, like, why is the price going up when the main indicators are falling? So someone asked me, if that's the case, why did the stock price drop because of greed? That's what they said. Actually, our interpretation can change depending on where we look first. But when I showed them the button called Greed on the Mac School, I explained that this could be a sign that the market might fall in the future. So in cases like now, when the interest rate stays above 1%, we've seen the biggest market declines within a month after that.
even today, as of now,
Looking at it, the Korea Composite Stock Price Index is down about 0.5%. So in terms of the index, it's currently adjusting downward by about 2% over the past 2 days. If you actually enter this area at a low price, It usually takes about 20 days for the S&P to be listed after that. If you look at it in reality based on zero, most of the time the minus was about 6% at the lowest point. When you entered the low point now, if you look at it on a weekly basis, you have to come out well at first, but after a month, it's usually around 0%. That means the weekly performance is usually not that great. In general, the weekly performance tends to be a bit lower, and that's what the data is showing right now. So that's why there's an explanation at the bottom of the max score, but if you buy at a relatively low price, it's a little better. The stock index has risen significantly, and people can now buy stocks more easily, causing it to continue rising. However, buying now may be too burdensome, so waiting a little might be better. That's the current situation. Next, and if you look at this section before it surged in December, it was around 83 points here.
That's what happened, and
It was like that, but recently the score has reached 84 points.
it was good. And today,
When I looked at the data from before, I checked it again and saw that Juhi's score had dropped to around 80 points. If it drops a little more here, I think it will fall to the next level in terms of process. But right now, the situation is just going down again, so I don't think it will immediately fall to the next level, like the panic selling we saw in the past. This section is more likely to drag on for a while rather than rebound quickly, so when things move like this, it's better for it to stay here for a bit rather than bounce back up right away. So even technically, it can get a little bit of a rebound and move up strongly, but if this greedy phase continues, the possibility of a sharp drop increases. On the other hand, when there was a sharp drop, this kind of rebound happened. So right now, it's actually healthier for the S&P index to take a breather for 2 or 3 weeks and go through a solid correction, especially after such a strong rally. That would be a much better situation. So rather than looking at the index itself right now, it seems like there will be a period of adjustment among individual sectors. During this adjustment period, wouldn't it be better to selectively buy stocks in strong sectors that are going through a correction? Since there's still a lot of cash on the sidelines, if you try to buy everything all at once, you might not be able to get the stocks you want at a good price for the next month or so. So it would be better to make your decisions gradually and selectively during this period. So many people will be happy to see this index. It went up to 84 points, but now it's dropped back down to 80 points. When the baseline drops to 75 points, it tends to fall further. Currently, it's still relatively high compared to last December and holding at that level. So I think it's clear that we need to be a bit cautious for now. So since the market has risen sharply like this and the Korea Composite Stock Price Index is still at a high level, I think it would be good if we could go through a healthy adjustment and then move on to the next stage with the strength to rise again. Personally, I don't think the possibility of a sharp drop is high when looking at the data, but I think we could see some important points over the next 2 or 3 weeks. And if that healthy adjustment ends, I think there could be another good opportunity. But at that time, whether it's industries related to the main theme of the market or industries related to artificial intelligence or even other sectors, in the end, they all have to rise and move together. Currently, the prices haven't fallen much yet, so unless the index drops, companies related to augmented reality and semiconductors are still at relatively high price levels. Compared to the past, they're a bit more stable and expensive. But it doesn't matter whether you focus on specific sectors in the market or try to judge which ones will rise or fall. It's important to look at the overall market. If you focus on those key parts and watch them together, I think you'll get good results. Now, if you want to invest in a fundamental way, you have to think about how to manage your portfolio during these kinds of periods. So last time, when I explained the classification of this screen, I drew about 20 types of leading stocks on this matrix. In value investing, it's about the SMART score. In this graph, the further right an industry is positioned, the more undervalued it is, while the industries on the left are worse. The good industries are located in the right area of the graph, whether it's a good company or a blue chip company. Even in a recession, companies that aren't affected much, like Taiwan Semiconductor Manufacturing Company, Nvidia, Google, Meta, AMD, TTD Amazon, and ASML are considered really good.
the case is on the left side.
The ones above aren't expensive in terms of valuation. Instead, the ones below are. So if you keep getting growth, you can keep going. But if you only focus on growth, there could be volatility in your performance.
In those kinds of industries,
Yeah, that's what we call a bottleneck. This is because the data was previously gathered and managed through Excel or spreadsheets, but individuals can no longer access it that way. When you register your area of interest, you can see everything right away in the system. We developed these features ourselves, so today I'll explain how you can view that screen. Yes, that's good. This screen is the one that comes up right away through the menu called One-Stop Diagnosis. No, the screen in front is one thing, and if you look at the other side, here I have drawn about 50 points from the lowest to the highest, like this. If you look at the actual screen in the back, the smart score is shown here in the middle, and the points on this side are on the far right. So the screen in the front is the one I made separately.
That's why earlier.
If you look, it's on this side of the screen, and from here, these are the things I drew. So if you check the portfolio of 20 stocks on the United States tab on one screen, this is how it comes out. So Taiwan Semiconductor Manufacturing Company, NVIDIA, are here, and now Meta, AMD, Amazon, TTD, these are companies that are doing well and are being traded actively, and the companies over here are growth stocks.
And then on the right side,
If you have it, be careful. That's what this is. You need to be cautious. So the higher up you go,
No, there isn't. Not even one.
there isn't any. In the past, people said investing mainly in stable, reputable companies was safe and good, so many invested based on that promise. However, be cautious, as there are many such things, and that's how you end up taking on more risk.
so that's why.
So when you need to be careful, you should naturally know that you have to lower the proportion of risky items in your portfolio. And if you look here, you'll see something called the Dongoromiro Index, which is basically the average score of the top 20 portfolios. It's an average score that has been calculated.
That's right, 20.
If you compare the scores of the stocks with the benchmark, you can see where they are positioned here.
So Mijueun,
The characteristic of portfolio,
simply put briefly,
the portfolio focuses on low volatility, high growth, potential industries for stability.
that's how the portfolio is structured.
That's how it is. So the reason why we keep buying the total like this, even though it seems inefficient, is because that way we can be balanced here. So in the short term, if you invest conservatively, it may seem easy and safe, but in the long run, you can achieve a little more growth. That's why even slightly riskier investments are considered to have growth potential. This is a principle that is firmly established in portfolio theory. That's why Mr. Dapio often talks about being a growth investor like this.
That's now.
Even in this achievement,
Depending on what you see.
it's being displayed accurately. So you can see these parts, but after my explanation of this screen ends, I'll explain how you can actually do it on the real screen. And I'll show you those screens as well. If you look at the app on your mobile device, the app is already launched, so you can download it and use all these features in the app as well. With many categories, viewing them all at once might be overwhelming. To improve accessibility and organization, we've structured them in a way that allows you to easily locate and access everything at a glance. The menu above is split into a simple and detailed version. The simple version allows you to see everything needed on one screen at a glance. I think there are too many categories here, but if you click on the detailed version, we've separated each section so you can see different parts at once more easily. Now, I will show you that screen. Right now, I'll just explain this one screen and move on. This screen shows the portfolio you registered under your interests, so this part analyzes your performance as an investor. So, if you look at the promise, people who mainly register stocks that are undervalued or stable as their interests are considered value investors. So now you can see where your performance stands, and for investors with similar performance, we recommend which investment style might suit you best. Also, don't just invest only in growth stocks and try to diversify a bit more. Does that make sense? And we also make recommendations automatically. So if you want to know which stocks to pick, value stocks are a good option. Right now, the market is a bit unstable. So wouldn't it be better to gradually increase the proportion of defensive stocks and consumer staples in your portfolio to strengthen stability? That's why I made the recommendation. I made the recommendation, but if you don't like it, you don't have to follow it.
But still,
I have so many things to do on this side, and it's really risky here, but I guess I have to let go of that and take care of those things first. Here are the screens for each strategy. Different groups are coming up.
so this,
The group is offering 11 investment recipes for the development, with plans to add 7 more totaling 18 recipes.
so in that,
We're displaying the recipes assigned to each part in advance. allowing you to view the portfolios constructed within those recipes and how they would be allocated. This is the format we aim to present to you. Now let's move on to the actual screen and I'll explain it to you. Mr. Depio, I attached this screen prior to the session but failed to inform you about certain parts.
It's my first time seeing it too. I'm going to react to it in real time now. Well,
Now, the max score is 80, but if you scroll down, you can see where you are right now. If you look up here, you can see where you are, and over here, you can see the current one-stop diagnosis. Yes, just like this right away, the promotion. But rather than just saying this, we need to actually get involved. Now, if you look at the right side here, you'll see a list of interests for several people. If you come in here, you can create lists of interests for different people, create interest groups, and even set up a portfolio for each group all in one go. So I made it so you can go in and check it out. If you go into my watch list, you'll see that there's already a choice box on the left side here. This is now my watch list. It's the list over there. It's a list, and here you can create a lot of groups with several people. So I created a new portfolio and made a list like this. So I registered categories like separate interests and so on.
And then
Interest category. Top 50 refers to all our members who are using our service. And as a group, they have received an average of about 4,000 hearts per person.
at the top,
The top 50 were mainly Koreans, a category that garnered significant interest.
that interest.
They just registered the categories. So I registered only the stocks that people in Korea are most interested in, and also to see where their ratings are and what kind of strategies they're using. First of all, today's topic is the United States portfolio, so I'll take a look at the United States portfolio first.
if you click on it before,
On the broadcast, Mr. Depio explained that the symbols are displayed correctly in the portfolio within the list of interests. And that's what he said. Oh, even back then, there was a personal story about Won Seung-gi.
That's right. So
Honestly, when I look back at that time, I wonder what I was doing.
I have to do it on the broadcast.
I did it, but didn't explain it well, so I was embarrassed. That's why I apologize. So today, I thought I should tell you this story. If you look to the right here, you'll see the Winston altar, and this menu follows that. So this portfolio is also an altar menu. I'll try to show it to you once. When you click on the one-stop diagnosis, the screen is fully displayed. If you look here, you can see the details, and if you look at the menu here, you can see the details and also the simple information.
close the menu.
If you make it simple, you can see both menus again. So the first screen where you see Jong-hee's portfolio is here. Well, pressing the simple button will make this screen appear unchanged, just as it did previously.
Viewing simply,
That's right, you can see everything in one page. So, my species table is here, and NVIDIA is here. So this part is for the relatively rare kids, and here are the more common kids. So you can see these kids at a glance. So when people tell you to be careful here, it's usually because the risks are clearly present. But I know exactly what those risks are, and if you know how far this company can go, you can still invest. It's not that you can't invest at all. Investing carries risks, and if you don't understand them or how to mitigate them, you shouldn't invest. The things that keep coming up as you get closer to investing are the items that need to be checked from the perspective of risk assessment. So those parts are things you definitely need to check. That
Right after that,
if you do that, in the recent portfolio, there are only 2 companies with rising smart scores. AMD and Broadcom are still on the rise. Patience is key to achieving results. And besides that, these are companies that are still in the growth investment phase.
this artificial intelligence.
That's what it found.
That's why.
The volume is small, but the smart score is high. A leader with a strong sense of responsibility.
Future growth.
It's a part that is being reflected in the price, and now artificial intelligence is making judgments accordingly. It seems like you're explaining Depionim.
Future growth.
You're explaining this very well with passion. So now, even if it's not a crisis, in order to prepare for a possible downgrade, shouldn't you gradually reduce your holdings in high-risk assets and make some changes in advance? So that's just one suggestion, and the reason for that suggestion has already been explained. For those who invest in these things for growth, I suggest doing it this way. That's why I texted you. If you look at it, this is actually pretty good right now. Platform companies and Taiwan Semiconductor Manufacturing Company are still worth buying, and there are also other good stocks that I will let you know about. So, a lot of people asked me if it's okay to buy these stocks right now since they've gone up recently. That's why I'm checking these things and letting you know. The reason this is important is because even if you don't use Microsoft Stretch, the business itself is actually a Bitcoin coin holding company. So when you analyze the industry, you have to consider that they hold some coins. That way, you can make a more accurate analysis and get better results.
Next,
On the wall, if you look down here, have you ever seen things like this before? That's where their suggestions are made. Premium members have a list of recommended categories, while investors have their own top 10 popular categories. My suggestions for you will appear directly in this menu. So if you take a look at this menu in the middle of the screen right now, you'll find it helpful. Investing in Seongjangju is based on the expectation of company growth. However, growing companies can be hard to find daily. That's why I'm showing you this menu on sale now, so you can find them all at once. So for those of you who want to find stocks up here or want to narrow down the categories here even further, if you click on the sale menu right now, you can add the portfolio here a little more. If you invest like me or just want cheap stocks, click here to easily find value growth stocks. That's why I'm sharing this with you. Organize your portfolio neatly to access the growth stock list. Click on the list and focus on the top to begin investing in growth stocks from there. So I'm telling you this so that you can have a well-balanced portfolio overall. But in the meantime, when the market is down, all my stocks are here and they're at the top right at the end here. That means overall everything is falling. At that time, if the market is also in the middle or somewhere in between, then you should gradually reduce your exposure and take profits little by little.
Making trades.
I think that's also a good strategy for one to consider. However, I will also try to look for companies that I can personally select and invest in. If you click on the sales section now, the list of discounted items will appear instantly. If a stock is not being traded at a discounted price, it will not appear here. Here, the stocks are listed in order of price increase, but you can also filter them. For example, if you want to see only undervalued stocks in a specific industry, you can filter by industry and see which stocks are undervalued in that sector. I know Yogil, I'm in charge of the structure. Google is... The stocks listed here are currently included, but in my opinion, among the large cap stocks, the one that stands out the most to me personally is Google. When I look at companies like Amazon, Meta, Apple, Microsoft, and others, I personally think Google is the most attractive. And there was also some news about Google recently.
when I look at it,
Google said that from now on, if you search using artificial intelligence through ads or examples, ads won't show up anymore. This was something that made it hard for Google to bring in revenue, but now I'm thinking that the technologies or platforms that can solve that part, or the parts related to plugins, have actually been made public on a large scale. Looking at it, I was also quite convinced that Google could really make money again as they intended. So personally, for those kinds of sizes, and especially among the more stable artificial intelligence sizes, I personally don't think Google is at the top. If you look at it by individual categories and look at the breakdown, you can see that Maisu Shinho of $154 comes out, and now it's $168, and Boyu Shinho, and at this time, Maisu Shinho comes out. If you look at the valuation, Google is relatively cheap, just a little bit.
The valuation is going up.
It's been undervalued for years and it's still the same situation. I was thinking that maybe the reason these stocks don't disappear from search rankings or these kinds of things is because of the risk. I think those parts have been resolved to a certain extent, at least for now, but although those issues haven't been completely resolved in the short term, you can see that the company's fundamentals are gradually approaching a proper valuation. So, for example, John Su said that if this company is rated 89 points, it's in the top 0.17% overall, and the stock price is also very cheap. If you just leave these things as they are, it's good. That's why these things come up on the risk list. Next, another sector I added was not something I personally recommended, but rather one of the industries that had a lot of rapid upgrades recently, the company called Sejeji.
this company,
Looking at it, there are many cases where people don't really know what this company does. It is a fintech company that provides a financial platform. The company's growth rate is around 85 points with profitability at about 90 points, indicating rapid growth. The market capitalization is not that big, but every time it was one of the industries that matched well, and the trading signal came out 3 times, but the cumulative return is 257%. So there are signals that match well for each sector. If you look at it, out of a total of 3 signals, the first one was minus and the other 2 were plus. When the first signal came out, it went up to $19, then dropped to $40, and then soared to 108%.
And then I bought again after that.
At that time, the market was in a bit of a slump at $38, so I think I sold. So I made a 9.7% profit, and then I bought again at $52 and have been holding it until now. So
I bought it again.
since it's 90%, this stock is the type that can easily give you a 100% return if the market sentiment turns positive. So it's a case that fits well with that. So when these kinds of stocks come up next time, if you see a signal, I think it would be good to try it out. So when you look at these kinds of stocks right now, you can see that a lot of their prices have gone up. If you look at the world, there are still stocks that are undervalued, stocks that used to be traded at low prices. Right now, the main stocks have rebounded, but these types of stocks are still quite cheap compared to the companies that did well in the past. So if you refer to those things and pick out undervalued portfolios, I think it will be good when the time comes. That
Next, this.
if you turn the magnifying glass, you can see that if you put this here and let it go like this, you can see everything again. So the items that are for sale, these are quite a lot of things for sale, so the scores are high and the volume is also high. Among them, the items that are selling well are usually shown at the top 2. Even among these 4, the ones that are currently selling well are the ones that are being maintained. So if they are being maintained, that's good, they're selling well. But among the items that are not selling well, there are also many that are not in the top 2. So
There are things like that.
there are concerns like that. In the case of a micro stretch, the volume doesn't come out as much, so the smart score may not be as low. When conducting financial analysis, the companies that fit the financials are often not the same ones being analyzed. This is due to the inherent structure of the industry.
Because it's done in production.
Now, it's not a model that makes money, you see. Instead, it's about attracting users. So there's interest in the number of users and things like that. Investors like to see those kinds of scores. They say, "Oh, we invested, so please show us some growth." That's what they want. Celestica, Credo, Pulmonia, and Talent Energy are similar types of companies. Tesla, Taiwan semiconductor manufacturing company NBID, and Uber originally had a strong sales focus. Then when you first register, even if you don't do anything lately, a 15% stock price increase can result in gradual portfolio growth. That's where we are now. So the order here also has meaning. The most expensive.
Yeah.
As the most expensive option, everything here is arranged automatically in order. So Uber is the most expensive among these, and Plasticar is a bit cheaper. If you look at it this way, you can see the difference. And on the left, there are no recommended categories. If you say there are no categories you need to pay attention to, you can analyze these things in detail on your own on this screen.
Then
There is a trade. Just give me the price. There is a trade. It's active trading. So does that mean the one with the most trades is the best in terms of the meta right now?
Now, when we say it's active trading, it's just based on volume and smart score, and we just put those two values together and say it. But if you actually look here, this is what it looks like. When you look at the top 2 lowest prices, this is what you see. So right now, the most actively traded one is this. That's what I'm saying. But when you look at it from the perspective of what you should actually buy, here in the meta ranking, you see Taiwan Semiconductor Manufacturing Company and 2 others. You can see that Taiwan Semiconductor Manufacturing Company and Meta are both included here. The price has been rising, but the earnings have not increased much in terms of actual performance. That's because the earnings tend to come out after the valuation goes up and when a full evaluation is made. Despite the buy signal, many stocks haven't risen significantly yet, indicating the signal remains valid currently. So, by listening to the signals without any conditions, you can see which stocks are currently good to buy and which are not. Even the stocks listed here could go up at any time. Although the entry signal has appeared, the price hasn't increased significantly and not much time has passed, so it's still a good time to buy. So, in a comprehensive way, the artificial intelligence analyzes and interprets this information, evaluates performance, manages portfolios, and organizes it in these formats. If you use these features when you evaluate various parts, you can make more objective decisions or manage your portfolio more efficiently. Here, I'll show you the top 50 interest stocks that our members are most interested in. Then,
People,
if you look at the 50 species that our people are most interested in and have registered as endangered species, you can see the list of endangered species here. It's a bit different from what Mr. An said. Yes, that's right. So since there's an average for each stock here, even if the recent performance wasn't great, the stocks listed here are the ones that have been consistently strong. Here, companies like IonQ, CrowdStrike, and Autodesk are highly valued, which is why they're on this list. And as you go down, the risk increases. Be careful on this site. The closer you are to the end, the more cautious you need to be.
Donyun,
If you do that, it means the score will go down. That's what it means. So the score too.
it's low, but only the price.
Because it's expensive, please be careful. There are a lot of posts about concerns in the community. So you should be careful when listening to what others say and be cautious of crowd strikers, but there are quite a few of them.
When will it be?
Some things can be done systematically, while others require a different approach. Since both sides are involved, caution is necessary when interpreting the situation. Rather than just looking at it like this, if you look at where it is attached and see it as a whole, it will be much easier to understand. If you look closely, even if you turn your eyes, you can see that among these 50 types, the ones that stand out like this are the ones with protruding corners.
Yes, that's right.
Some of them are using the value investing strategy. They're letting us know like this, and that's why this part is showing us the good stocks right now. Adobe, ARM, Walt Disney, ASM World, Salesforce, and Datadog are also included. Meta, Microsoft Service, Now, Oracle, PayPal, Taiwan Semiconductor Manufacturing Company, Visa, and so on are also included. If you look at the next part, you'll see that even stocks like Equinix are listed here. Aren't you being too stubborn?
Just once.
Take a look, Professor Kronos. Can you use your technical analysis on this as well? So after you add it to your favorites and press the button, it moves right to the golden cross. I didn't have NVIDIA before, but after trying out NVIDIA, then Tesla and Oracle, and recently SAP, I realized that through these, I could use features that allow me to analyze my own portfolio more effectively. So currently I have 11 stocks in my portfolio, but over time it could go up to 18. By connecting these stocks, I can make my portfolio more solid, and by adding more data and getting feedback, I can gradually improve and diversify it. If you try it this way, when will it work? Today, it becomes your assistant, or the other options keep scoring better. If you use the original scoring system that lets you know these things, I think it will be good for many people. If you want to enter a category in this one-stop diagnosis but don't know what to choose, just click the Show All button here. At the top, you'll see a heart icon. If you click this heart at the top right, you can add it to your list of favorite categories.
To your list of favorite categories.
Once you've added it to your list of favorite categories, you can access it from here. Just click on the icon at the bottom and you'll be taken right to your favorites list. If you press here, you'll see the groups where you've added your items pop up like this. Whether I put it on the post, put it on the meme post, put it in the middle of the comment section, I just want to put one more. I just want to find it here and there from here. Press the group add button, create a name and add more members. And for each group you add, you can also receive a portfolio diagnosis. And if you do it like this, you can manage portfolios for several people conveniently. So I think it will be very helpful. It's really good.
Today, when I opened my eyes in the morning, I saw that the chatbot called Choice Talk, which is said to be the first platform in the world to use artificial intelligence algorithms for analysis, was already analyzing things through artificial intelligence. In the past, I had to go in myself, search for the information I needed one by one, and then I had to look at the categories I was interested in and think about them. But now it seems like the artificial intelligence just helps me right away. Is this stock dangerous? Is this stock attractive right now? When should I buy or sell these two stocks? I want to buy more value stocks because it's too aggressive. That's why, honestly, it seems like everyone is investing in artificial intelligence. So if I have any questions, I can directly communicate and get information rather than just passively watching or listening. I think it would be nice if I could get answers right away like this. Adding a tool for direct communication would make it feel like investing alongside an expert rather than investing alone. This TNCFC stock price has dropped a lot recently, but when do you think it will go up? This is how artificial intelligence guides you, right? I think it would be good to try developing it like this once. Artificial intelligence.
Annalise Report is a research and development center that studies and develops things like engines and this kind of stuff. So for those categories that I just mentioned, you need to check them like this, as I explained earlier. So we are currently aiming to create a final goal where you can analyze and interpret reports in a report format so that you can break them down and understand them as web pages. If you can read the report in that way, you will be able to understand everything. So when that comes out, not only will the text-to-speech voice sound much more natural thanks to artificial intelligence, but if you just read the text or if you listen to it, you'll be able to understand the information much more easily. When I first met Mr. Choice Star in September, Choice Star was still in its early version. After 6 months, it has evolved into a different version from what it was back then. If you invest, you always feel a bit uneasy and you keep thinking that the system is never perfect. Because there are still many parts that need to be strengthened and improved, I think there are still a lot of areas that are lacking. Our goal as a company is to gradually fill in those gaps and create a more convenient platform for investing. That's all.
That's amazing. And then, as a woman, I was a bit shy, but I decided to speak up. Now, we started our YouTube channel on May 22nd, Thursday, and if you watch our broadcast, you'll see the real chemistry between us. So I also started broadcasting.
I think you did the same, Deputy.
You said exactly the same thing, and I did the same as well. Starting today, Google is included in the Image Original tab, which is also why we integrated Google. Because of this input-output event, Google search exposure has become more accurate and there's a lot more potential. So that's why this event became a turning point. That's why I made this comment.
I told you before.
Yes, I listened and understood. I will keep that in mind. The same thoughts.
On the same topic, much.
It was as if we communicated and then acted together.
At the same time,
it felt like Chul Yong and I shared the same purpose.
After it's over, I'll listen to the video again.
I'll definitely check it out. And when we were selecting the playlist for the subscribers, we included a lot of P.E. Rachel. So
both.
There are two requests. One is that I want to see P.E. Rachel as a forward, and the other is
based on guidance.
A comment also asks for details on how the P/E ratio is calculated for estimates. It's also challenging to precisely assess a company's true value solely based on its P/E ratio. That's because you have to compare it to the growth rate.
So in addition to the P/E ratio?
So there was a request to add the G, which stands for growth rate, to the P/E ratio and create the price earnings to growth ratio. Adding this to the representative list would be good. Got it.
Among the things you just mentioned, the price earnings to growth ratio was reflected this morning, right?
Price earnings to growth.
Ah, that's right. Now I'll just explain the screen so you can see where to look. Next.
These indicators too.
In the United States stock market, it's a bit different. Each investment indicator has its own meaning, but
the indicators.
If you look at foreign sites, you'll see that the numbers are a little different. So when you look at it, investors see one number here and wonder why it's different over there. The numbers are all different. So what should we do about this? There are a lot of people and all the numbers on those sites are correct numbers. The reason the numbers are all correct is because they each have their own standards. If you don't understand those standards and formulas, you might end up writing something completely wrong. For example, I heard that if price or earnings to growth is around 1 or 2, that's good. But somewhere else said it's 1.5 and another place said it's 0.8. So if that's the case,
where should I trust?
When this issue arises, investors must carefully examine the indicators to understand the situation properly. First, let me explain the price earnings to growth that was reflected on the left side. I'll try searching for NVIDIA on the screen. Can you see the screen, Mr. Representative? Yes?
Here it is, here.
If you look here, you can see that there used to be public relations here before. If you look here, it shows up, right? Jinseo price earnings to growth.
If you look here,
Price stock earnings to growth is listed in place of the original price earnings ratio, price to book ratio, price to sales ratio, and return on equity. I moved price to book ratio down in the mobile version to save space and placed it in the assets section under investment indicators. To improve readability, I separated price earnings to growth and placed it next to price earnings ratio. As a result, NVIDIA's price earnings to growth is displayed as 1.03 times.
Please check right away.
You can check it. As you mentioned, for things like price earnings ratio and forward, the current price earnings ratio here is trailing 12 months. It's price earnings ratio based on trailing 12 months, and for forward, it's not actually that difficult. I just added that to the data as well. If we just do a simple calculation, since this is the expected earnings per share, if the stock price is 130 and the earnings per share is 430, then the price earnings ratio would be about 3 times. This is actually what becomes the price earnings ratio forward. So when individual investors look at this indicator, they need to look at the forward price earnings ratio. That means you compare the expected earnings with the current stock price. And if you just divide them as they are, it becomes the forward price earnings ratio, which is what you should be looking at.
Next one.
Oh, I want to explain, so I'll add some explanations to this indicator. Previously, Joe-hee added explanations, but now there are none, so you might be confused about how it works. That's why I'll add some explanations above. Today, I brought the price earnings to growth multiplier, which is a data-based business multiplier. I brought it because I wanted to talk about it, and it seems that Joe-hee has invested more than 1 month in the original stock trend. There are a lot of things like the overall index, bug index, and also error index that we test. Price earnings to growth is calculated by dividing price earnings ratio by G like this. So I checked the system alpha again today. There is price earnings to growth in the system alpha, but the numbers are all different. That's right.
Seeking Alpha's investment indicators.
If you look at Seeking Alpha's investment indicators, price earnings to growth is listed as trailing 12 months, and then there's something called growth price earnings to growth. So in the basic section, price earnings to growth is shown as trailing 12 months, and then below that, in the forward section, there's another price earnings to growth.
Forward is next year.
It's only available at a strong standard.
But right now,
when you look at price earnings ratio on Hyunjae, even if you look at price earnings ratio on a different site than the one you usually use, price earnings to growth is based on a strong standard. So if you compare Hyunjae's price earnings ratio to the strong standard price earnings ratio, you have to make a fair judgment. Hyunjae's price earnings ratio should be compared to the strong standard price earnings ratio, and price earnings to growth should also be viewed as a strong standard. Doing that will lead to illogical situations. So first of all, you have to look at the standards consistently, and everything on that site is based on the strong standard. Actual performance is based on the strong standard. When presenting results, maintain consistency for comparable growth rates. If there's no separate price earnings to growth figure, we currently use the strong standard. In this price earnings ratios, price earnings to growth, this price earnings ratio is using 44.1. And then for the growth rate, or when you use the growth rate denominator in cases like the current S&P alpha, they're using the trailing 12 months earnings per share growth rate. Then
the most recent 1-minute period.
Actual results are out. For the 1-minute period, there are combined earnings per share values for last year's Q4, Q3, and Q2. Before last year's Q4, the earnings per share growth rate is calculated, and by dividing the growth rate, the price on earnings to growth is calculated using this method.
How about me?
If that's the case, trailing 12 months does not reflect the future. So for me, this price earnings to growth is actually closer to the forward price earnings to growth. The reason is because here we are using the earnings growth rate projection. Right now,
Expected value 42.
we're using 83.
So.
Since we're using 4283 in 4283 in 441, since it's 4283, we subtract 1. That
GPO is now.
The indicator is currently at a price earnings to growth of 1.03, so the price earnings to growth indicator for that stock means the price earnings ratio is currently linked to the price earnings ratio, and as the price earnings ratio goes up, it reflects future growth expectations. That's how you should look at it.
But this growth rate.
This measurement over a short 3-4 month period doesn't reflect the actual growth rate. It can't be compared to the annual average or used to judge the overall trend. When we only have 4 months left, all the scores or these bases will be carried over to the next year. After 8 months, the situation is not as expected. The main reason is that the core price has already been reflected earlier than anticipated. For each industry, when there are less than 4 months left in the fiscal year, we carry over all the growth rates and scores, including price, earnings to growth to the next year. Afterwards, I also try to lower the current price or earnings to growth value as much as possible. Currently, the price earnings to growth is based on next year's forward value, but in the future, we plan to use the average growth rate over the next 3 years. The basic idea of the original price earnings to growth is to use the long-term growth rate, not just the one-year growth rate. So when calculating the long-term growth rate, sometimes we use the average growth rate over 3 to 5 years like with finance, and that's how we're calculating it now. And in the case of capital as well, when calculating the price of earnings to growth, sometimes we use the long-term growth rate over 10 years or more like this.
So in that case,
So I try to look at two types of price earnings to growth values. One is the price earnings to growth calculated using the average growth rate over the past 3 years, and the other is the forward price earnings to growth, which uses the projected long-term growth rate. I try to separate and compare these two price earnings to growth values. Earlier, I mentioned the forward price earnings ratio, so I will try to show you the forward public relations as well within the same service, so that you can compare both within a similar time frame. That's good.
I've mentioned this a few times before, but among the people who think that aggressive investment is important, there's one person in particular. So you have to make rational and reasonable judgments to increase your chances of success. So for that reason, we need to establish a logical investment strategy. And in order to have logic, there needs to be a basis for it. Usually in investing, this basis is numbers analysis, and then we analyze those numbers to create logic. But if we can't analyze the numbers properly, then the logic itself becomes shaky. So what Representative Bangum said earlier seems to be very important. I think one of the reasons we can invest with confidence is because of this. Due to the data's high reliability, we use price earnings to growth for analysis. By gathering various types of information and directly reflecting those numbers, you can make more accurate decisions. I think that's why it can be a very valuable partner for small and medium investors. Today, I also received a lot of good information, that's right. Especially, I really like the fact that I can invest with artificial intelligence, just like you mentioned earlier.
Next time, I'll make sure to show you even more interesting features or things like voice recognition. So
Right now, I have a name that I came up with for fun on YouTube Shorts, so I put up a picture as well. Every morning, I organize the news related to this topic into a list and send it to myself by email at a certain time. That's how I do it, and that's why I started. But the problem is, these articles aren't just the latest news. They include news from a week ago, a month ago, and even older articles. So up until now, it hasn't been able to do filtering properly, but if you could create a feature that filters out duplicate articles in the choice stage, I think that would be really great.
yes, I think it's possible. Next, I was developing something based on the request I received earlier, and that's when I mentioned it once. The 8K videos coming out of electronic bulletin boards, real-time data, and then important industry decisions. These kinds of information are coming out, but the degree to which they are contextualized is something we're currently running a closed beta test on internally. Once those are all generated and registered as interests in the app, if they come out on electronic data gathering, analysis, and retrieval system, you can get them in Korean within just 1 minute. Rather than simply translating the data as it is, we can even develop it to the point where we provide interpreters who explain how to interpret the data, and even analysts who offer their own analysis. So when it comes to news, when I look at the news, I think the news is well summarized, and inside there are a lot of interpreters who are good at summarizing those kinds of things. There are areas where I don't use the news myself, not because there aren't people who use it or because there aren't enough analysts, but because I personally don't use it. There are markets where things like direct electronic disclosure are open.
If you interpret them well,
Depending on the outcome of important events in practice, it can significantly impact the stock price. But
my stock price.
when singing, there are many cases where people don't know the reason, and sometimes there are a lot of mistakes during the actual performance. So if you clearly mark those parts, you can use the service more conveniently and safely. It seems like it took a lot of time to develop here, but I think I did my best after the first launch. Yeah. The public relations board was put up earlier. That's not my responsibility.
thank you. Keep going. It's also a pleasure to watch the gathering of the so-called Choi Star without any hesitation. Today, I watered it thoroughly so it can grow well, and I'll try to greet you again next week. Have a happy weekend. Thank you. Yes, thank you.
Thank you.